In this video, I'll share with you the top 3 indicators used by pro traders and how you can apply them to make more money. Whether you trade stocks, forex, or commodities, the principles shared can be applied to any asset class. All the indicators mentioned in this video are free on the TradingView platform. TradingView is the best free web-based charting platform used by thousands of pro traders worldwide. You can check out TradingView for free using the link in the description. Now, the first indicator will help you determine the trend of the asset you are trading. Whether you are a trend trader or a mean reverting trader, understanding the direction of the trend is fundamental to your success. The best indicator to define the trend is the exponential moving average. Here we have a 30-minute chart of the Euro USD with the 100-day exponential moving average represented by this blue line. In its simplest form, when price is above the moving average, we are in an uptrend, and when price is below the moving average, we are in a downtrend. Now that we have determined direction, the second indicator will help identify the strength of the trend and whether the trend may be losing some steam. This indicator is called the Relative Strength Index, or the RSI for short. The RSI is an oscillating indicator which ranges between 0 and 100. When the RSI reads above 70, the underlying asset is considered to be overbought, signaling a strong probability of a pullback or reversal to the downside. On the flip side, when the RSI reads below 30, the underlying asset is considered to be oversold, signaling a strong probability of a pullback or reversal to the upside. Here we have a daily chart of SPY with the 14-period RSI indicator. You can see that the SPY was in a nice uptrend and the RSI was also rising. When the RSI hit over 70, a few candles later, the SPY reversed back to the downside. Here is another example using AMD on the 4-hour chart. This time, we have a downtrend with the RSI also trending down. When the RSI went below 30, it was a signal that AMD could potentially pull back or reverse, and you can see that it eventually did. Now, the final indicator will help you predict future support and resistance levels. Support and resistance levels are critical to trading, especially when it comes to stop loss and take profit targets. My favorite way to identify support and resistance levels is using the pivot points indicator. A pivot point calculates a price level using average of significant prices. Here we have a 4-hour chart of Apple with the weekly pivots added in purple. You can see on multiple occasions, Apple used its weekly pivot as support before continuing its next leg higher. These areas would have been perfect entries into this trend, which lasted over 2 months. There you have the top 3 indicators used by the pros. If you would like to learn more about these indicators, I encourage you to watch these videos on the screen now, and I will see you in the next one.